So good noon to everyone. Welcome to our webinar this afternoon, Green Social Sustainable Bond Series 2. This is a webinar for issuers, underwriters, arrangers, and advisors. So to start things off, let us put ourselves in the presence of God. Merciful God, we ask that you give our leaders the wisdom to guide our nation and the world out of the current economic crisis. Help us to protect the poor and all those who are struggling during this difficult time. Provide for their needs and give them hope. Open new opportunities for them to furnish the resources they need to live with dignity. Encourage those who have enough to share essential resources with those who lack the necessities of life, and to do so with humble, grateful, and loving hearts. We ask this through Christ our Lord. Amen. Next is the Philippine National Anthem. And now to welcome all of us to this afternoon's webinar, I would like to call on the 2021 Phoenix President, Attorney Francis Lim.
Thank you very much, Mike. Good afternoon, ladies and gentlemen, especially to our speakers, panelists, and special guests, all as well as the members from the media. Welcome to the Green Social Sustainable Bond Series, or the GSSB series. As you know, this is our second GSSB webinar. We launched this project last month, where our panel of speakers and experts discussed how the Asia-Pacific region, more so the Philippines, is ripe for this kind of instrument. From that overview, our webinar this afternoon will deep dive on the GSSB process, the information requirements and experiences from the market players, the issuers, underwriters, and arrangers. There is also a role for financial advisors. So I hope that the FAs present here today will equally benefit from this webinar. We in Phoenix want more GSSB issuances moving forward, not only because they're fast becoming to be a global trend, but more importantly, because it is good for the health of our environment, upon which depends the sustainability of our business. This is not new. If you recall, the first certified green bond series was issued by AP Renewables back in 2016 for their TV Macban geothermal project. Late in 2019, BPI issued the first dollar-denominated ASEAN green bond and raised $300 million from it. This came on the heels of the 100 million Swiss francs from its maiden ASEAN green bond issuance for green eligible projects here in the Philippines. We're privileged to have BPI as one of our speakers this afternoon. Moving forward, we expect greater emphasis on ESG, and will see companies adopting sustainability frameworks in accordance with the ICBA Green Bond principles and the ASEAN Green Bond standards. For example, The Energy Development Corporation, the largest pure-play renewable energy company in the Philippines, has recently announced or disclosed that it is issuing green bonds this second quarter of 2021. We in Phoenix believe that there is plenty of headroom for growth and participation by more issuers and hence banks and investment banks in this market. According to a 2021 article, the Philippines has so far raised more than $3 million in green bonds and a growing portfolio of green infrastructure investments. We would like to make sure that the stakeholders are aware that the capital markets, specifically the debt market, is adjusting to this global trend. We would like to thank our partners who have been working hard to put this together. On behalf of Phoenix, we thank the Asian Development Bank and the Securities and Exchange Commission for supporting this project. We have likewise expanded the base of our organizations involved in this initiative, and I would like to acknowledge the Bankers Association of the Philippines, or BAP, and the Investment House Association of the Philippines, or IHAP, for coming on board. May I thank and acknowledge our hardworking Capital Markets Development Committee, with its Chair Tess Rabalo, Vice Chair Malu Cristobal, Liaison Director Zondi Garcia, and Committee Member Director Mike Gorin. Maraming salamat at mabuhay ang Phoenix.
All right, thank you, Francis. All right, so to ensure that we can smoothly transition from one speaker to another later, I will be introducing other speakers at this stage of the webinar. Our guest moderator will be introduced separately later. So for our first speaker, it will be Robert Fowler, or Rob Fowler. He is an expert in sustainable finance and green bonds, with more than 25 years of international experience in climate change, sustainability, energy, regulatory regimes, and capital raising. Most recently, Rob worked for 5 years with the Climate Bonds Initiative, where he assisted hundreds of green bond issuers, bankers, investors, and verifiers to navigate the new world of sustainable finance. Rob is based in Australia and has lived and worked in a number of Asian countries. In addition to his engagement with the ADB, he is part of the team at Cicero Shades of Green. He is a member of the Australian Sustainable Finance Initiative and serves on a number of ISO groups, driving the development of international standards for sustainable finance. Welcome, Rob. And then to share their experiences later, after Rob, our next speaker will be Mr. Datuk Chi Leong Chung. He was appointed to the board of CHAGAMAS Berhad on March 2013. He joined the company as the Chief Executive Officer on April 1, 2012, and has been the president since 2018. He has 29 years experience in central banking, focusing mainly on the financial system stability and the financial sector. He was involved in the development of the financial sector blueprint, establishment of the deposit insurance scheme, and the Malaysian Cooperative Commission. He was also a member of the board of directors of Credit Guarantee Corporation Berhad. He has spearheaded CHAGAMAS' entrance into the international bond market. He was instrumental in establishing the company's $5 billion multi-currency program, under which the company's inaugural and Southeast Asia largest offshore renminbi bond was issued. Currently, under his leadership, the company has concluded the country's largest sukuk issuance in 2013 and was afforded many awards, including the Islamic Finance Advocacy Award at the Global Islamic Finance Awards. Welcome. So our third speaker for this afternoon is Ms. Maria Consuela Lucban. Ms. Chinky Lucban is the Senior Vice President and Head of Corporate Strategy, Investor Relations, and Sustainability of BPI. She is primarily responsible for financial planning and capital management, investor relations, and enterprise development projects. She also oversees the bank's Sustainability Office. She is also the chairperson of the bank's Sustainable Funding Committee. She has over 30 years of banking experience, taking on various senior roles within BPI in its asset management and trust businesses, insurance business, corporate banking, marketing, and deposit product management. Welcome, Chinky. Next speaker after Chinky will be Mr. Karthik Iyer. He will be sharing his GSSB experience with us. He is the Green Finance and Capital Markets Consultant for the ADB, working with the ASEAN Catalytic Green Finance Facility and Innovation Hub. Prior to relocating to Asia, he was Commercial Director in the Head Office of Climate Bonds Initiative, or CBI, in London, and had oversight for partnerships and funding, investor engagement, certification, as well as geographical oversight for India, China, and Asia Pacific teams. Karthik is also an advisor on CBI's senior management team. And Karthik was formerly commercial advisor for asset management and green finance at UK's Department for International Trade and comes with a deep experience in capital markets, asset management, and banking across Asia, Australia, UK, and Europe. After all of the GSSB experiences that will be shared with you this afternoon, our fifth speaker will be Ms. Shan from the Asian Development Bank. Dr. Shan is an economist at the Economic Research and Regional Cooperation Department of the ADB. Prior to joining ADB, she was an associate professor at finance at Fudan University in China. Her main research interests include financial services and institutions, financial market development, investments, and empirical asset pricing. Her research has been published in academic journals on topics relating to financial asset pricing, portfolio allocation, and financial market development. Dr. Shan works in the teams that produce Asian Development Outlook and Asia Bond Monitor. She is likewise part of the team that maintains Asian Bonds Online, an online bond market portal for ASEAN Plus 3 bond markets under the ASEAN Bond Market Initiative. And lastly, speaker number 6 for this afternoon is Mr. Kwasin Pong. Pok is a national of Thailand and has been the financial sector specialist in the ADB since April 2016. He supports ADB's financial cooperation and integration team in promoting financial market integration in ASEAN and ASEAN Plus 3. He is also part of the Secretariat team of the ASEAN Plus 3 Asian Bond Markets Initiative, an initiative established by the ASEAN and the People's Republic of China, Japan, and the Republic of Korea to develop local currency bond markets and promote regional financial cooperation and integration. Again, thank you, Pop, for gracing our webinar series. So as mentioned by President Francis, again, on behalf of Phoenix, the ADB, BAP, EHAP, and the Philippine SEC, we thank you, our dear speakers, for your participation. And so now, without further delay, I would like to turn over the floor to Rob Fowler, who will talk about how to pitch sustainable bonds to potential issuers. Over to you, Rob.
Thank you very much, Michael. I hope you can hear me okay.
Loud and clear, Rob.
Excellent. Hello, everybody, and welcome to this session. Hopefully, we can get some useful insights for you, and we can help you understand a bit more about what the issuers are thinking about, what the potential benefits or costs of these sorts of transactions are, so that we can get a really good understanding of how these types of labeled instruments can be put forward in the market. Next slide, please. What we see right now is quite incredible growth in sustainable finance. Labeling of financial products like bonds or loans or sukuk, it's really starting to catch on. I got involved in this process back in 2014, And since then, the growth has been fantastic. But what we're seeing is that even with all that growth in product, the investors are still not satisfied. Every week we have further commitments from investors to go green, to put more into ESG, to use these approaches in their mainstream investing decisions. And so we're starting to see quite an interesting challenge. We have a very large demand for these products. We have strong growth, but not strong enough. And so it really creates an interesting opportunity for issuers to take advantage of that particular time, that particular gap between supply and demand. Next slide, please. The challenge very much is that labeling an instrument like this takes quite a bit of effort. But for an individual entity or bond issuer, the effort is all up front. Once you've issued one labeled instrument, then you can very easily issue a second or a third or a fourth. The effort and cost required for each of the subsequent issuances is much, much less. And so often it's about helping an issuer to understand the process, but also understand that this first effort, this initial effort, can be challenging. But if you're looking to issue a series of these things or keep going in the capital markets, then it can be a very valuable investment of time and effort. What we've done at ADB is we've tried to put together a really comprehensive guide on how to do this. What are the key issues? What are the key decisions? How do you do it well? How do you do it efficiently? And how do you avoid some of the pitfalls which have been exposed in the past? So it's a fairly comprehensive piece of material. What we've done is created 12 steps, the first one being a bit of an overview and understanding how it works, and just moving through each of these different stages of the process. It's worth reading with time. It's fairly complex and involved, so there's some very detailed diagrams. I've got a few of them here in PowerPoint format, but they do probably go better on a bigger screen or on a laptop or computer. Some of the information is very much broad and detailed and broad and instructive around how to do things. Some of the information is trying to help with decision making. So how do you decide on this pathway or that pathway? And trying to help people understand some of the choices that are emerging. One of the challenges here is that this market is changing and emerging quickly. We see a wide variety of flavors and instruments, and whether everything from green to social to sustainable, even blue and pandemic, and the list goes on. And so we're starting to see a lot of different flavors come through, but the basic process is quite similar. Whenever you're using a use of proceeds style approach for green bonds or social or sustainable bonds, the process is pretty much the same. So let's dive in. What I've done here is I've tried to break it up into a few pieces. And so I'll talk through, the first 3 parts of this, and then the next 2, and then the next 3, and the next 3, and try and help you understand how to move through this. But it's hard to, of course, convey all of this detail and richness over a short period. So I'm going to give you some guideposts and try and get you an understanding of some of the key issues. If you're trying to help an issuer to decide whether or not to go down this path, it's best to have a deeper understanding of it first, because then you can allay any fears they have or get to any challenges they might have and understand yourself. If further detail is required, then we're very happy to provide that. Our role here is to support issuers, support investment bankers and other facilitators, support investors and everyone to get on with this. So whatever help is required or further detail or clarification, please feel free. These fact sheets, these detailed guidance are being translated into every language we can within ASEAN. We already have a Bahasa Indonesia version. The Vietnamese version is coming soon. So we're hoping to see many different languages in this material. Okay, next slide, please. So after the overview of all of that, the first 3 steps in getting to a label are very much internal for the issuer. Now, if an issuer already has a sustainability strategy, or if they already have a green strategy, then they're likely to have gone through this process to a degree already. If they're starting from scratch and they don't really have a focus on this topic of green or sustainable, then it's going to take a little bit longer, and it might actually need a bit of reflection at the senior levels to understand what should be their strategy. The important thing is that a lot of this information is going to investors. And so issuers of bonds need to be careful and conscious of what they're telling the investors and making sure that that's a valid story. The first step for most entities is to identify what they have already, which is green. Now, there's a lot of contention about what's green enough, and that varies a lot depending on where you are and what sector you're looking at. But that process of identifying the green parts of your portfolio of assets is a really important step. Some entities are just looking at capital expenditure. Some entities are just looking at refinancing of existing hard assets. And some entities, especially the sovereigns, are looking more at around the ongoing costs of maintaining sustainable infrastructure or green assets. So there's a variety of different ways that people are doing this. They're looking at everything from hard capital already on the ground through to capital programs now in the future, and also operating costs as well. The key here is to try and create a list that you can use ongoing. So you can have a base list of what's green. You might be bringing more assets in. You might add them to the green list. You might have a holding part, which you're not sure if they're green enough, but you think they might be. So you put them in that part of the list. Creating and maintaining that list is a really key part of this. And that's part of the transparency that investors are looking for. When it comes to internal machinery of how this works, almost all bond issuers are large enough to have internal accounting systems and tracking systems. So this isn't really a big issue. It's really about just bringing that information together so it's in one place and can be demonstrated. And of course, there's an ongoing process. The commitment when you issue a green bond is to have enough green assets to match the issued capital, and so that the issued paper. So over time, you'll probably need to manage that green portfolio. And if that green portfolio is expanding, of course, you can issue more green transactions. So that's the first part. What's green enough in your list? What's green enough in your portfolio? Can you create the list? Can you have a good picture of what's going to be included in a bond? The next part is to document that process. And what we've seen is the emergence of this single document called a green bond framework, or more broadly, a green finance framework for bonds and loans, perhaps, or perhaps a sustainable finance framework if you're going to go very broad about how you're going to include maybe green, maybe social, all sorts of other things in your program of labeled bonds or loans. Now, we have a very detailed list of what's expected in these sorts of documents. There's many, many examples available. And so leveraging those examples is really important and is a great shortcut for issuers. There's no real prize for new and creative in this space. One of the interesting things we know about the bond market is they operate with enormous volumes of capital, but they operate very smoothly around information, templates, consistency, having the same structures, the same arrangements each time. So there's no need to create new and exciting things. We've seen some green bond frameworks to be just 3 or 4 pages. Now, that's enough information to get to the heart of what's being transmitted and the transparency that investors are looking for. One of the things that is important is that the green finance framework or green bond framework is in line with the broader narrative of the issuer. It's a marketing tool, it's a labeling tool. So it's important to have that consistency between the way the entity positions in the market and then how it's positioning with investors around this green product. And we need to see these frameworks alive. They're set and they're created before a bond is issued, but they need to be updated over time as things change. And of course, if you're issuing again and again, then having a broader framework is really useful. The third piece of this is around the internal controls. And this is very much just documentation around what you're doing. Do you have an investment committee that already considers investments? Can you leverage that committee and say, okay, we're going to put a standing item on that committee's agenda. It's going to talk about the green bond every quarter, and we'll document that, and there's our internal process. Ta-da. So the basic sort of arrangements is what needs to be laid out here. No one's looking for brand new complex processes. It's really about making sure there's governance around what's in the bond and how it works, signing off of reports, that sort of stuff. And of course, having a decision-making process that someone can look at. And an external reviewer will come in and have a look at this sort of documented process. Often what we find is that an issuer will have many of these procedures already. It's really just creating a map for how they're deployed or how they're used for someone else to examine. Okay, next slide, please. So as I mentioned before, there's lots of different types of projects or assets or expenditures which can be included in a green bond. And so laying out what's possible within your existing arrangements, what do you already do, and then of course, what's green enough or social enough, whatever flavor you're choosing. Those are the two things which will bring together these definitions for you and bring together what you have as an issuer or what the issuer has if you're an advisor. Having a better understanding of the issuer's business will help you identify what could be over here that's green, that could be over here, and that can be really useful. Next slide, please. There are lots of different green definitions out there. And when this green bond market started, it was very much open. One of the entities that I work for, Cicero, was the first to provide an opinion, an external review on a green bond for the World Bank back in 2007. And there wasn't really any precedent there. They created a framework to look at the shades of green, how green are these things? And that's continued on to this day to be used as a way to help define what's green enough: dark green, medium green, light green. We also have the Climate Bonds Initiative has a taxonomy, which has been a really useful template for others. That's more of a binary system, or yes, it's green enough, gets a green light, no, it's out, gets a red light, and maybe an amber color, if orange or amber, if there's some extra thresholds or other things that need to be demonstrated. What we're seeing now is this expansion of taxonomies all over the place, and we're seeing many announced all the time. Recent developments over the last few days have seen the EU's new taxonomy, which is a very broad and complex approach that's being put in place. We've seen the Russian taxonomy is being released soon, and that's including nuclear and other things like that, which are relevant to Russia. So the definitional work is ongoing. It's going to continue for a while. We're hopeful to see globally consistent definitions, but of course, locally relevant definitions as well. So depending where the issuer has their assets will drive which set of definitions you should use. And that's one of the key choices to make. Next slide, please. As I said before, creating the list is a key step, documenting what's in there and why, what could be in there if the definitions shift. That sort of thing is really important to have a good solid list that's updated. Next slide. And of course, the Green Bond Framework. This is a sort of list of many things that should be included there. As I said, these range from 3 to 4 pages for a very simple solar deal for a pure play renewable developer or something like that, through to say 25 pages of lovely pictures and photos if it's a provincial or semi-sovereign that's issuing and has a real story behind it. So there's a lot of contrast there. The best way to get the insights is to just spend some time reading a few of these frameworks. Try and find the ones that get good reviews. That'll help you. And make sure that you're sort of bringing in the language so that there's a commonality there. As I said, being new in this stuff is only going to make it harder for investors to digest and create more questions. So having it simple, laid out, very clear is exactly what you're looking for. Next slide, please. Now, internally documenting procedures is, of course, something that a lot more entities are doing these days. And this is just an example of how you bring those procedures together to make it clear how these decisions are made. Documents are kept. Next slide, please. So that's the first part. The first 3 steps are really getting everything together as an issuer. One of the ongoing requirements, if you issue green bonds, is to have reporting. And many, many investors are looking for this. They want to understand what's happening. They want to know that if they've invested in this green bond and they've seen all the information before the issuance, they want to be confident that after a year, after 2 years, however long the term is, that there are actually green investments happening. All those assets are still there and they're still green enough. So this ongoing reporting is really interesting. It's emerged quite a lot recently. As more and more investors get involved here, we see more and more demand for reporting. But unfortunately, most investors don't really have a deep understanding of what is green or what's important in the green space. And so what they're looking for is they're not really sure, and the issuers are providing something, but not other things. Do we want that? What happens if we require that? And so the issuers are also concerned about the effort required to put together a lot of this reporting on a regular basis. It's new for a lot of issuers to ongoing report this stuff. It may be internal performance data. You might know that that solar plant is running at 86.7% capacity, but you generally don't report that outside the organization. And so it's a bit interesting to have that flow of information that now needs to go out to investors. So reporting has become a bit of a challenge for a lot of issuers. What we always recommend is to make it simple. and just go with simple indicators. Don't get complex, or try not to be indirect in how you're estimating these things or evaluating these things. But the key is allocations. What has the money gone to? What have been the allocations within the portfolio? Are those projects still green enough? So it's important to understand that investors are looking for transparency. Often they're not sure exactly what they want to see, but we are seeing some consistent things. We're seeing a lot more investors using the sustainable development goals as a sort of framework for their own investments and categorizing and allocating. So that can be a useful thing to report, how your investments or the proceeds from the bond align with some of those SDGs. Often it's really just confirming that it's still there, that you're still going, that here it is. And in the bond market, this is a bit of a new thing to have a focus on ongoing reporting. Normally when you buy a bond, you set and forget, and someone in the back office takes care of all that stuff, unless there's a problem, of course. So that's an interesting shift in what we're seeing. Issuers need to be ready, but they really shouldn't do too much to push out and make complex impact reports. Next slide, please. So when it comes to allocations, it's really important to explore one concept here. Early on, green bonds were sort of expected to be what we call ring-fenced. And that's where the money was received by the issuer of the bonds, and it was kept in a separate account. And that separate account could not be used for other things. It was ring-fenced around. This is often what we see in project financing. We often see project bonds and that sort of thing running into specific accounts with specific flows ins and flow outs for the repayments or other things like that. So that was the initial concept. That's very difficult to do if you are a corporate or a bank who has a normal treasury function, because cash is fungible within the organization. So most people now use what's called earmarking. Now, this is where you essentially are issuing a bond, and say you want to issue $100 million worth of green bonds. You need to show that you've got $100 million at least of green assets in your portfolio, with an ownership or an interest or exposure to them, whether it's a loan book or it's owned assets or whatever it might be. So that sort of equivalence, 100 million issued green bonds, at least 100 million of assets on your book. You don't necessarily have to link the actual cash through the organization to get to those investments. And that's something that sometimes is very confusing for issuers and deal teams, because it's a bit of a theoretical sort of step back. We know that there's a use of proceeds concept where if you can state the use of proceeds in your legals, that's where the money needs to go. But this is not quite that literally stating the use of proceeds. It's more of a concept of, okay, here's the green assets, here's the green money we've received. So I just want to try and explore that. It's a really important thing to explore, because a lot of issuers go to the capital markets thinking, what am I going to use the money for? And that's exactly what they're trying to think. But you can actually refinance a bunch of green assets you've got already and use the money you raise for whatever else you might be doing. So it's an interesting thing to explore with an issuer. Next slide, please. Now, impact indicators are really important. I talked a bit about the reporting burden that issuers sometimes really feel. So exploring what kind of indicators could be useful is great, but don't think you have to report on all of the suggested indicators. That's a trap. So don't do that. The investors might love it because they love more data, but you'll find yourself wrapped up in helping an issuer to get it together and then get it verified. And it's got to go to investors. It's got to be right. So yeah, it's tricky to use too much. So simple impact indicators is the way to go. Next slide, please. Okay. What we've seen in the green bond market is that the early stage issuers of green bonds, such as the World Bank or European Investment Bank, had such strong controls and such strong tracking of things. This is one of their main staffing areas, is MRV. There was a lot of trust that these things were okay. The external review process here really started once a broader range of corporates and others started getting involved. And so we now see that across the world, whether it's a green or social or sustainable label deal, almost all label deals have some sort of external review or opinion that's been provided. And so there'll be generally a framework document, green bond framework, and then there'll be an independent report, so to speak, which provides an opinion on the framework or the green bond itself. So you're usually seeing those two documents coming to you, as well as whatever marketing documents or prospectus or legals for the transaction. So those are the two documents that come with the green part, green bond framework and a review from an external reviewer. Now, the process to engage these reviewers is not new for a lot of companies. They've engaged technical experts and auditors for a long time, so that's not too hard. But we've provided a bit of detail in the framework, in the fact sheets, about what to make sure is in the contracts. You know, what are the things to make sure are covered, that sort of stuff. And we've talked in a bit more detail about what's expected as you go through this process. And so, getting involved with an external reviewer, providing the information, responding to questions, going through confirmation, clarification, finalizing a report, that sort of stuff, that all has to happen. It can take a bit of time depending on how ready the issuer is. We've seen a lot of investment bankers and deal teams run the verification process with the issuer. So it's not that the issuer has to do it by themselves. They can have help from a banker as well to put things together if they, need someone to help. And it's very much it's not so much who pays for the verifier, but the fact that it's an independent assessment. So if an issuer is uncomfortable about paying for a verifier separately, then sometimes an investment banker will say, okay, we'll pick up that tab and roll it into our broader fee base. Or I know that there are various other areas which will help to subsidize these things, national programs in ASEAN, or perhaps ADB helps with that as well. So getting this external review done is really important. We're seeing more and more local external reviewers, which is great, and we're hoping to train and bring those forward as part of the work we're doing in the region. The last part here on the right-hand side, seeking certification or recognition. Now, this is an area that is really important to look at and be aware of before you start too much into the process, because this is essentially what you're looking at the end. Am I going to have a green bond which is labeled as consistent with international standards, or is it going to be green bond principles, or what is it actually going to say? What's the label I'm going to use, and what are the recognition I'm going to get? If you just go to the next slide, a couple of slides, or next slide, please. Next slide again. Sorry, I'll come back to that one. And again, sorry. Okay, so what do you want the bond to be recognised as? Is this a bond for the local market? Is it a bond for regional investors? Is it a bond for investors who have international mandates or links, or would be more comfortable with an international label? And so if you're looking to explore what avenue to take, there's a few things to consider. Some of these labels aren't full yet, so you can't do some assets under some labels. Climate bond standard is one of those where there's a couple of gaps still about what is not really covered yet by the details. There's also ASEAN regional standards, which are strongly encouraged and really do add to the regional momentum here. So, and of course, individual countries. Indonesia is putting together a lot of material and working towards updating its processes. And of course, we see China as a leader in domestic regulation of these markets. So very interesting. You've got to choose that pathway, and it's useful to have a good discussion about that before you start too far down the road of this journey. Next slide, please. What we've done in the fact sheets, we've provided a few examples, because it's hard to really describe this approach. Well, what is the right pathway, or what's the most efficient pathway? And so there's a few examples here. As I said, if you're looking for advice, that's what ADB is trying to provide. So this is a good thing to explore and see if you can understand how your situation or your client's situation might fit into these pathways. Next slide, please. So the issuance process for a green bond is essentially marketing. It's a bond issuance. The credit, the legals are all the same, but there's a layer of marketing above that. And that's what we're trying to do here. So if you're an issuer who has a new strategy around sustainability and a bond comes out, it's labeled, then you're going to try and build momentum around the story that you have. One of the opportunities with green bond issuance is to have deeper discussions with investors. And so it's easier to build that momentum. There's also more media exposure. People are interested in these new deals. You'll likely get some sort of inclusion in daily updates or newspapers, mainstream or industry rags. And of course, trying to get your deal into indexes or or onto listing platforms is also a great way to attract attention, and can be a threshold improvement. If you can get onto some of these indices, then the purchasing, the secondary market for your deal will have a big flow through. After the issuance of the bond, there's an expectation from investors that there will be reporting. And in some standards, in some labels, you also need to get an external review after issuance as well. That's mandatory for things like climate bond standards, but not for every type of label. And so there's an ongoing engagement between the investor and the issuer. And that's a little unusual in the bond market, but that's what we're seeing more and more. And we're also seeing a really interesting thing because there's such a shortage of supply that when a bond investor either gets a taste of a deal or misses out, they'll come back to that issuer later on with a bit of a reverse inquiry and talk about how they might be able to help them with their next capital raising. And we've seen a lot of entities, even state, provincial governments, basically put something out there and then get reverse inquiries. The next capital raise just drips along. They don't have to actually go out to the market in any significant way. And that's the interesting opportunity where the supply and demand is so out of balance at the moment in this market. Next slide, please. The stock exchanges are ramping up, and we're hoping to see more and more activities from them because they can drive this activity. And of course, they can be a great partner in communicating this if you have a specific deal that you want to get out there. Next slide. So there's quite a lot of detail in the fact sheets about the reporting, and that's because we're trying to provide people with very clear guidance. We don't want people to run down too many holes, but also to make sure they're not going to get too many questions or pushbacks from investors. So the next couple of slides look at the different types of reporting which are involved. Allocation reporting is one. Where has the money gone? Next slide, please. There's also eligibility reporting. This is basically explaining that the green assets are still green enough. And if they have a threshold or some sort of performance metric involved in that test for greenness, then that's an important thing to include each year. Buildings are a good example for that, which have an ongoing rating process. Next slide, please. And of course, impacts are really important. Now, some people use the word impact in different ways. And impact investing as a broad thing, a broad trend, is about trying to get some positive things out of the investments. But when you talk to technical people about tracking information, performance data, then you talk about impacts, it can get confusing for them. They're used to using things like outputs or outcomes, and then impacts are further down the line in terms of what's then happening. So it's interesting to have that discussion between investors who look at impact as a very broad thing, and then technical people who are looking more at the way those things flow through, from very direct things like renewable capacity, solar capacity, all the way through to what the solar farm produces, and then maybe the implications for emissions somehow, if you can calculate that. So impact is an important word. It's a very important word for this evolution that we're seeing in finance to a more sustainable finance focus. And we're very, very keen to help people understand this in more detail. Next slide, please. I'll leave you with the last part, is that if you're going to issue multiple deals, you have a choice. You can either get lots and lots of green assets and then issue deals against that big bucket, that big portfolio, or you can try and match up individual deals with individual groups of assets. And it's an important discussion to have with an issuer if they're looking to have a series of issuances over time, how they position it as a program, or how they help investors to understand that this isn't just a one-off, that the relationship they build is going to be a future relationship as well. Next slide, please. Okay. I'm not sure how I'm going for time, hopefully not too badly. I wanted to just go through a few of the questions that I get asked or have been asked. I've been helping issuers and bankers and deal teams for 5-6 years now, and had some great questions along the way. Here are some of them, and I'll try and just sort of touch on each one. How much does it cost? Now, this can be put in two different ways. What's the extra cost on top of issuing in a normal bond transaction? That can be quantified. The external reviewer and some extra assistance internally, that sort of thing. What does it cost in terms of time of the people involved is a very important question as well. It's not just the financial aspects. There's also a cost of not doing this. And we're seeing that more and more in Europe and in Australia and North America. if you've got some green stuff, why aren't you issuing a green one? Why aren't you labeling? So there's also potentially a cost of being too far behind in this particular trend. In terms of benefits, what we can see in terms of cost of capital is that you can play the supply-demand imbalance. You can price your deal in a range and then push the demand so that you've got good oversubscription, you'll get to the bottom of the range. And you might save 10, 20 bips in your deal, depending on how it's priced. Now, it's very unusual for the cost of doing all this stuff to prepare for a label is more than a few bips. We've had people talk about 1 bip for this and 2 bip for that. And so if you can play the supply-demand imbalance when you take the deal to market, you can definitely make a difference in the way it's priced. How much time will it take to prepare everything? It can take a couple of months. It can take a lot longer, but it can also be done very quickly. And we've seen deals come through in weeks. The external reviewers get very pressured and they don't like it so much, but it happens. But the bond market is dynamic. And so we have seen people build up over time, make early announcements, signaling announcements, and then eventually come to market a few months later. That's a useful strategy because it gives investors a chance to engage and to explore what you're doing. Will it distract the team from the core objective? This is a really interesting question. We've heard a lot of deal teams in their first green transaction talk about the extra effort, the extra time with investors. Each investor has a few green questions as well as other questions, so you have to give them 10 more minutes if you're on a roadshow. That has practical implications. There's also the effort to skill up and learn about this for the team, and so there are some challenges in terms of distraction. But what we found is after the first one, the subsequent ones just go so much better that everyone's happy to have made that investment in the first one. The next question is, will I get my name in the newspaper? And I don't know how many treasurers you know, but many of them are pretty, not very exposed to the market and to the media. So it's great if they can get some exposure like that. And I've seen a lot of treasurers very, very pleased personally about the way that the deal's gone through and the attention they've had, and that they can go home and tell their kids that they're trying to do something about sustainability and the green planet. There are risks involved, absolutely, but the reality is that the green label is not necessarily part of the legal arrangements or the credit arrangements for the bond. So even if the green assets don't come through and the label gets taken away, the credit is still fine for the bond. And most investors will be quite happy with that arrangement. And the last question before I finish, is this going away? No. No one that I talk to is saying it's going away, but I probably have a more select audience. Is it taking longer to get traction in some parts of the world? Yes. How long will it take to really flourish? We're not sure, but it's coming faster and faster each year. And that's what we're seeing. Thanks so much for your time. I hope that's been useful. And please explore this detail if you can, and feel free to ask us for further advice. Thanks so much.
All right. Thank you very much, Rob. That talk now gives us a clear idea on how to potentially approach our clients regarding GSS bonds. So may I call on Mr. Datuk Chung Chilyong, President and CEO of CHAGAMAS Berhad. Go ahead, please, Datuk.
Good afternoon. Thank you, Mike. First of all, let me thank the organizers for inviting me to share CHAGAMAS' experience in terms of sustainability bonds and sukuk issuance. First of all, let me just share what is CHAGAMAS, just in case those of you who are not familiar with CHAGAMAS. CHAGAMAS is the National Mortgage Corporation of Malaysia. It is the largest issuer of corporate debts in Malaysia today, having issued a total of about 350 billion Malaysian ringgit worth of bonds and sukuk. We are rated A3 by Moody's, which is equivalent to Malaysian sovereign rating, and we are rated AAA by the local rating agencies. So in essence, the mandate of CHAGAMAS is really to promote home ownership among Malaysians, as well as to help develop the secondary mortgage market and the Islamic finance market in Malaysia. Now, why do CHAGAMAS embark on sustainability agenda? So basically, when we look at our mandate, we feel that we would need to enter to create a broader perspective and impact in terms of the ESG, environmental, social, and governance ecosystem. Now, being the largest issuer of corporate debts, it is important for CHAGAMAS to provide options to the primary lenders as well as to the government of Malaysia in terms of avenues to the capital market and capital requirement to help finance some of these essential projects. CHAGAMAS has successfully incorporated our sustainability bond and sukuk framework into our 60 billion ringgit MTN IMTN program, which does allow us to issue sustainability bonds and sukuk. This will provide actually opportunities for socially responsible investors or those who are very much engaged in the ESG space, looking for sustainability bonds or green bonds or social bonds to have an opportunity to invest in this instrument. As I said, since we are the largest issuer and our regular supply of about 10 billion ringgit worth of bonds and sukuk a year, we do hope that the substantial or part of the portion could be in the form of sustainability bonds and sukuk. Now, CHAGAMAS entered into the foreign currency issuances way back in 2014. And when we start talking to foreign investors, they actually obviously share with us their aspiration and their needs and how they look at in terms of the ESG agenda. And having realized that, and also having the fact that after our foreign currency issuances, an independent party, Sustainalytics, actually did an assessment on CHAGAMAS. They were actually engaged by the foreign investors. So actually that gives us the insight that investors are looking more and more into this space. And that is why CHAGAMAS also embarked on coming up with the sustainability bond and sukuk framework, which was actually established in 2019. So we recognize our responsibilities in terms of the ESG with sustainable development, particularly in the area of housing. We work very much in terms of how we can help the government, for example, in facilitating the affordable housing agenda, and how our Malaysians can own their first home at a reasonable cost. So it is always our core priority to ensure and to help develop the capital market, as well as to provide opportunity for home ownership among the Malaysians. And hence, our sustainability bond and sukuk framework was the first step in that direction in our mission to raise awareness among the community, particularly the investors, as well as others, on the importance of the ESG and sustainable development. CHAGAMAS sustainability framework is also an effort in terms of supporting the SDG 17 Sustainable Development Goals, which was been established by the United Nations in September 2015. And proceeds from the issuance of these bonds and sukuk, which comply with our sustainability bond and sukuk framework, will be used to purchase loans or financing related to certain targeted SDG goals, which is inclusive of course, SDG goals 6, 7, 8, and 11. 6 being in terms of the water, clean water and sanitation, in terms of SDG 7, which is in terms of energy, affordable and clean energy. Then we talk about decent work and economic growth, as well as, of course, on the cities, the sustainable and clean and affordable cities and communities. So in terms of our framework, it has also been verified by a rating agency, the RAM, Sustainability Sdn Bhd, which is a subsidiary of the Rating Agency of Malaysia. They provide the second level opinion in terms of that. So in terms of our framework, it is actually consistent and in line with the International Capital Market Association 2018 Green Bond Principles, Social Bond Principles, as well as the 2018 Sustainability Bond Guideline. It's also consistent with the ASEAN Green Bond Standards, the ASEAN Social Bond Standards, as well as the ASEAN Sustainability Bond Standards. In Malaysia also, our Securities Commission has issued the Sustainability Responsible Investment or SRI Sukuk framework. The proceeds from our issuances under this framework will be used for renewable energy, energy efficiency, green building, low carbon and low emission transportation, sustainable water and wastewater management, affordable housing, as well as employment generation. So as you see, the rationale for us to come up with this framework was really to demonstrate CHAGAMAS' vision and mission to promote home ownership, as well as contribute towards the nation development. It's also to support, as I mentioned earlier, the 2030 United Nations SDG goals, to support the 11 Malaysian Plan Sustainability Agenda. The 11 Malaysian Plan is the plan issued by the government of Malaysia. It's also to support Bank Negara Malaysia's value-based intermediation initiative. Now, the Bank Negara Malaysia value-based intermediation initiative is targeted for Islamic financial institutions to look beyond profitability as part of its business agenda. And finally, also to support the Securities Commission Sustainable Responsible Investment Guideline. In October 2020, CHAGAMAS actually issued our first ASEAN Sustainability SRI Sukuk. Okay? So we went through the process. Obviously, as you know, CHAGAMAS is not a bank. We are a secondary mortgage corporation. So what we do is actually we buy housing loans or Islamic home financing from the financial institutions, and we will issue bonds or sukuk to support those, to fund those purchases. So it's important here, basically, CHAGAMAS has been working and talking to the banking institutions to identify assets that fall under this category of sustainability SRI sukuk. Now, under our Securities Commission SRI framework, affordable housing is actually listed as one of the asset class. So in this issuance, which was done in October 2020, CHAGAMAS issued a 3-year ASEAN Sustainability SRI Sukuk worth 100 million ringgit. Now, this is part of the Malaysian ringgit 60 billion IMTN program that we have established earlier. Now, what is important to note is on the same day as this 100 million issuance, we also issued another 350 million ringgit worth of IMTN, meaning the Islamic mortgage, Islamic medium-term notes of the same tenor. So we issued in total 450 million on that day, 100 million on sustainability sukuk, and 350 million on the IMTN. The bid to cover ratio was about 4 times at the initial price indication. What is important is through this book building process, due to the overwhelming response, the price tightened for the both actually But what was important to note is that the SRI Sukuk, or the ASEAN SRI Sukuk, was actually priced at 2 basis points tighter than the IMTN that was issued on the same day. So well, in terms of our Sukuk issuance, of course, this is based on the Murabaha principle. But I guess what is worth noting is that we actually managed to reduce the yield for the SRI part, or the sustainability Sukuk that was issued. And this obviously is quite important in terms of seeing to perhaps future issuance in the future. So you see that basically for our 3-year issuance, it also somewhat ensure that our success in ensuring that the proceeds would actually ultimately be used to meet the requirement as in our guideline. So in this case, it's quite straightforward because the assets that is going to be purchased has already been identified upfront. So basically, the proceeds here is clearly going to be used for the purpose of purchasing housing loans that fall under the category of affordable housing. Now, in Malaysia, affordable housing is somewhat defined as houses below a certain level, which is about 500,000 ringgit. It's also normally to first-time house buyer who are earning less than 5,000 ringgit individually or 10,000 ringgit as a household. So there is a certain definition in the sense. So in this case, the proceeds were solely used for that purpose. And also this issuance received what you call this a rating, a tier 1 social impact rating, consistent with what has been prescribed in the CHAGAMAS Sustainability Bond and Sukuk Framework. So it is not only just rated as a normal AAA local issuance, it also carries a tier 1 social impact in terms of the use of the proceed, because it's been used for the purpose of affordable housing. And as I already mentioned just now, the issuance was actually priced at 2.23 as compared to the other Sukuk, which was priced at 2.25%. The investors that actually took up the SRI Sukuk was actually quite diverse. It includes a statutory body, sovereign wealth fund, our pension funds, financial institutions, asset managers, as well as insurance companies. So you see that actually in terms of the investors that actually came in, it was actually very well diversified. What I wanted to explain is also that the investors for the SRI Sukuk was actually larger than those who were just investing in the normal Sukuk. The reason for that is because several of the asset managers, as well as the pension funds, as well as sovereign wealth fund, had set up a portion of their, or have allocated a portion of their funds for purpose of investing in SRI or sustainability or green or social bonds and Sukuk. So because of that, you will see that the demand has basically increased in terms of the sustainability part of the issuances. Now, our framework actually comprises, in terms of the social impact, of two parts, the impact being the social impact as well as those that are under the environmental impact. So in terms of the social impact, our framework actually provides for the purpose of affordable housing as well as employment generation through the SMEs. While in terms of the green solutions, this includes the renewable energy, energy conservation or energy efficiency, green building, low carbon transportation, as well as sustainable water and wastewater management. On the next day itself, on the 27th of October, CHAGAMAS also issued Malaysia's first multi-tenant ASEAN sustainability bonds and for the SME sector. Now, for this issuance, which was actually not through book building, but through private placement, it was multi-tenant, 1 year, 2 year, and 3 years. So 35 million for the 1 year, 20 million for 2 years, and 45 million for 3 years. Now, in terms of this, again, it is part of the 60 billion ringgit program, in this case, the MTN program. And as you can see that basically in this case, this was done through private placement. Now, what is important is that the use of the proceeds in this case was to purchase the financing of eligible non-carbon emitting industrial hire purchase receivables to the SME from an institution. So basically, in this case, it has a tier 1 environmental benefit rating as well. In terms of the social rating, in terms of this employment generation, and also in terms of the tier 2 environmental impact rating due to the sustainable water and wastewater management. So this particular sustainability bond has actually 2 parts, meaning that it has the highest social benefit rating and environmental benefit rating of tier 1 by the under the framework for employment generation via SME, as well as the renewable energy part, and also have a tier 2 because of the water and wastewater management. This success in our issuances in the last, over the last months have actually spurred us to discuss more with banks to try to look for more assets that will qualify under the sustainability bond and Sukuk framework. Now, what are some of the challenges as an issuer, and what are the key experiences? Now, in terms of the challenge, firstly is there is actually scarcity of assets that qualify under the sustainability framework at the present moment. Because in our case, because we buy loans from banks or financing from banking institutions, most of the banks have actually not tagged their loans or financing as such. So in order to actually come up with even a portfolio of 100 million ringgit worth of loans or financing that qualify under the sustainability bond and Sukuk framework, it takes a lot of effort. So one of the main challenges, I said, is really to look at in terms of the having banks to tag their loans or Islamic home financing or Islamic financing as sustainable or as green assets, so that this will facilitate easier issuances of our sustainable bonds and Sukuk in the future. Secondly, I think another challenge is really for most issuers is really in terms of monitoring the use of the proceeds. Now, but in our case, it's actually easier because we have already identified the loans to be financed. So basically, those already have qualified under the framework. Now, if we have just issued first before we actually purchase the loans or purchase the financing or the asset classes that qualify, I think then it will be a challenge in terms of monitoring. Obviously, we will have the system in place to monitor this. Now, obviously, I think as Robert has already mentioned, the other part is, of course, on the reporting responsibilities. The fact is, in terms of reporting, What CHAGAMAS is actually doing at this moment, we have already come up with the reporting in terms of the use of proceeds report to be incorporated into our annual report for 2020. And also we have obtained a post-issuance annual review by the rating agency in terms of to ensure that basically the issuances have met what has been prescribed in our sustainability bond and Sukuk framework. So these are processes that need to be done as an issuer, and of course to ensure that this has been clearly validated by the rating agencies so that it will provide the assurance to our investors that the proceeds have been used to fund assets classes that fall under this category of sustainability bonds and Sukuk framework. Now, in terms of our CHAGAMAS business, because we have what is called as a liquidity model where we purchase loans on a with recourse basis. So if loans become non-performing or impaired, the banks will need to replace those loans. So it's an important challenge for CHAGAMAS as well is to ensure that the replacement loans or financing also meet those criteria. Now, secondly, there's actually an enormous demand for sustainability bond and Sukuk, for green bonds and Sukuk in Malaysia. And that is why I believe you will see that because of that, we could actually tighten in terms of the pricing. But in general, I believe in Asia, unlike in Europe, where you actually will see a 5 to 10 basis point differential. In Asia, so far, I think especially based on Chinese experience, and also in around the region, you will probably see the differential being just 1 or 2 basis point at the most either way, or it could even be flat. That means similar to a non-green or non-sustainable bond or Sukuk. So in our case, we had investors that were willing to receive a slightly lower yield. There's a growing SRI funds being established in the country, and I think this is a good step for us because with such establishment of such funds, there will be more and more interest in terms of investing in the SRI Sukuk or the sustainable bonds in Malaysia. There's also a growing awareness in terms of the social responsible investment and ESG. And as such, we see more and more investors actually moving to this end. As I said, currently, a lot of investors, they will buy whether green or not green, sustainable or not sustainability bonds or Sukuk, but their expectation is perhaps the yield need to be the same. So we need to actually have more and more investors who are really inclined to the ESG agenda so that they will be willing to look at the lower cost so that we, as the issuer, in our case, as a secondary mortgage corporation, can pass on this lower cost to the end borrower. Now, the Malaysian government has taken a number of initiatives in terms of setting the standards for the sustainability bonds and Sukuk. As I said, our sustainability bond and Sukuk framework actually incorporate not just on sustainability bonds and Sukuk, but also on the green bonds as well as the social bonds side. So the Securities Commission of Malaysia have introduced the SRI Sukuk and bond framework to actually incentivize and encourage issuers, more issuers to finance green, social and sustainable projects. They will grant to allow issuers to actually claim some of the expenses, and there's also tax incentive in the form of tax exemption. There's also the introduction of the SRI Center in collaboration with the Bond and Sukuk Information Exchange. And this center actually is a one-stop resource center in terms of the SRI Sukuk and ASEAN labeled bond in Malaysia to cater for greater transparency and access to information by the various stakeholders. Also, we have seen the establishment of the Center of Excellence, or the COEs, on sustainability for the public listed companies as well as intermediaries through the capital market Malaysia. So the objective here is to build up sustainable practices among the private sector, whether it's the corporates as well as the investors, and to ensure that the manner these companies raise financing is sustainable. So I guess the sustainability agenda or even the green agenda is still on its way in terms of in Malaysia, basically. And for CHAGAMAS, we are also currently looking at working together with the central bank and of course with the industry to come up with the green taxonomy and also to drive forward to support the central banks and the government of Malaysia's effort in its green agenda by not just looking at the green taxonomy, but also to build an ecosystem to facilitate easier issuances of green bonds and green sukuk in the future. So thank you very much for your kind attention. I'll be happy to take any questions you have later on. Thank you.
Right. Thank you very much, Mr. Datuk Chung Chi Leong. Again, may I call on the representative from BPI, Ms. Chinky Lukman. Go ahead, please.
Yeah, good afternoon, Mike, and good afternoon to all the participants in this webinar. Thank you to Phoenix for the invitation to speak about BPI. About BPI and its sustainable funding program. Let me start with a quick background of BPI's sustainability journey and proceed to talk about BPI's sustainable funding framework to structure my talk on our issuance experience. BPI started its sustainability journey in 2008 when we established our Sustainable Energy Finance Program in partnership with the International Finance Corporation, which is the private sector arm of the World Bank. BPI was the first Philippine bank that IFC partnered with. The SEF program is central to our ESG bond story because it allowed us to understand and become specialized in this market of green projects. In 2008 was also the year when we published our first sustainability report. In 2010, we partnered with the WWF Philippines in the Business Risk Assessment for Climate Change study, which concluded in 2014, which covered 16 Philippine cities. It was initially a study for BPI's internal use only, but with the results of the first few cities reviewed, our CEO then, Gigi Montinola, saw that this information had to be shared with the public to inform and better understand the country's vulnerability to climate change and the need for mitigation and adaptation. In 2013, we formally established our Sustainability Office to increase awareness and start looking into initiatives to lessening the environmental impact of our operations. In 2020, this office moved under our Strategy and Finance Group, working closely with our investor relations and corporate strategy teams. In 2016, with the launch of BPI Direct Banco, our microfinance arm, we firmed up our commitment to financial inclusion, especially to the underserved segment. In 2018, we organized our business banking group to put more focus on the SME segment of our portfolio. In 2019, we established our Green Finance Framework and issued 2 landmark green bonds as part of the bank's EMTN bond program. And in 2020, we expanded this Green Finance Framework to include social and sustainability bonds, turning it into the current social and sustainability bonds. Current sustainable funding framework. The framework and the bond issuances were a natural progression from our work on financing green projects under the Sustainable Energy Finance Program and our focus to service the MSMEs through BPI Banco and the Business Banking Group. We continue this journey through our sustainable funding framework and issuance of ESG bonds. BPI's green and social bonds have the following features. First, they highlight the bank's commitment to contribute to the UN Sustainable Development Goals. In particular, we focus on goals number 6 to 13. The bonds are based on our sustainable funding framework, which follows the 4 components of globally accepted standards, which are really extra steps that an issuer has to make when issuing any of these ESG bonds. A challenge posed by these ESG bonds is the additional scrutiny, probing, and technical evaluation by very strict international auditors and ESG bond investors who have technical metrics and high standards for sustainable finance. Thus, the need to engage a second party opinion provider and auditor to ensure that the underlying framework and framework supporting the bonds really are in line with international standards, and to verify the use of proceeds through our impact reporting. Issuance of these bonds is really just like any other bond issuance, but one needs to establish the framework and standards that will inform the bond issuance, particularly providing for clear policies and procedures to verify and validate added value of green and social projects. BPI's sustainable funding framework fulfills the requirements of the Green and Social Bond Principles administered by the International Capital Market Association, or ICMA, and it comprises the following 4 components: use of proceeds to eligible green and social projects, management of proceeds, which will include internal systems that are put in place for tracking of proceeds, policy for deployment of unallocated proceeds, and substitution of assets. Thirdly, it provides for project evaluation and selection done through the Sustainable Funding Committee and its subcommittees. And lastly, reporting annually on our use of proceeds and the impact of these projects. In the creation of this framework and our subsequent issuances under it, we worked with various teams across the bank. Our corporate banking and business banking teams, who have the green and social lending portfolio, BPI Capital for the underwriting, and our treasury and global markets team for the bond issuance, and our investor relations team. To oversee the implementation of the sustainable funding framework and its standards, we created a sustainable funding committee that meets regularly and whose members are responsible and contribute to the 4 components of the framework. Project evaluation and selection involves pre-qualification, inclusion of the green and social finance portfolio, and a semi-annual review by the Sustainable Finance Committee. Reporting requires an update on use of proceeds and an annual impact reporting to ensure transparency by the issuer to its investors. For BPI, we have our annual reporting on the use of proceeds and impact report, very audited by Sustainalytics for an added assurance on the quality and reliability of the reporting, and that all is in accordance with the sustainable funding framework. BPI's green and social bond issuances were a natural progression in our sustainability journey. We capitalized on our sustainable energy finance and SME portfolios. Initially, the Green Finance Framework created in 2019, we had in mind the possibility of expanding this to include social and eventually sustainable bonds once we were able to find the correct impact reporting metrics. In March 2020, the momentum for this picked up with the observed impact of COVID-19 health measures that negatively affected MSMEs. One of the main drivers was to support MSME lending, infusing needed capital to support this sector that accounts for 90% of businesses in the Philippines. We finance new and refinance existing eligible projects with the proceeds from these bonds, allowing us to free up funding that could be channeled to other businesses. The issuance of green and social bonds provided us with a stickier pool of investors that had a medium to long-term investment horizon, matching the maturity of the project's lives. These issuances also gave us a clear view of the acceptability of the BPI credit among foreign and local investors, given the tight pricing of these bonds at issuance. The green finance framework and the green bond issuance took about 3 to 4 months because it required more groundwork to set up, particularly the framework. While the sustainability funding framework and social bond issuance took only about a month or less because it expanded on the existing framework. In 2019, following the creation of the BPI Green Finance Framework, we issued 2 green bonds in quick succession, both landmark deals with many firsts. First, in August, a negative yielding Swiss franc denominated bond with the issue size of 100 million Swiss francs, and then quickly followed in September by a $300 million green bond, the first US dollar denominated green bond issued by a Philippine bank. Both green bonds have a use of proceeds specified to financing or refinancing for renewable energy, energy efficiency, sustainable water and wastewater management, pollution prevention and control, and green building projects. And then in 2020, after the establishment of the Sustainability Funding Framework, we issued the first ASEAN social bond in the Philippines, our COVID Action Response or CARE bonds. This was the first ASEAN social bond issuance from a Philippine institution, the first COVID response bond in the country, and the first ASEAN social bond addressing COVID. Looking at the oversubscription rate of the 3 ESG bonds we've issued, we can see that there is an appetite coming from the international and local market for these types of issuances. A key component in issuing ESG bonds that differentiate it from other types of bonds is the list of eligible projects and the impact reporting metrics. ESG bonds are very carefully managed, requiring transparency at all times. For BPI, we focus on renewable energy, energy efficiency, green buildings, pollution prevention, sustainable water management, and MSME lending. It is important that issuers find consistent and reliable metrics for these targets because it will dictate the impact reporting, which is a key component in international ESG bond standards. Reporting on these and having reliable definitions and impact metrics ensures that these issuances are not just greenwashing exercises. Our 2020 use of proceeds and impact report will be included in our 2020 integrated report coming out in April and will cover our 2 green bonds and 1 social bond. In our 2019 report, for instance, which is available on our website, with our issuances, we were able to allocate 100% of our proceeds to 6 green projects, 88% of which went to renewable projects and 12% to green buildings. This is in line with the general trend for the allocation of green bonds, where energy projects followed by green building projects are the most prevalent. The impact on our clients is on the availability of funds to support the green projects, and now with our CARE bonds, finance MSMEs hit by the pandemic. More than just financing, we also help ensure profitability, sustainability, and overall success of green projects. We are able to provide free training and technical advice to customers for their green projects, risk assessment and monitoring, use of IFC tools for green building projects, and compliance to gold sustainability standards. Green projects have proven return on investment for clients either through long-term cost savings on operations, catering to emerging and growing markets, or giving clients a strategic edge over their competitors from the differentiation on sustainability, truly turning their business green to gold. The impact to BPI, it has boosted our pioneering leadership in sustainable finance. It has provided us alternative funding sources and low-cost funds to finance and refinance green and social projects. It is also for us a risk management tool through funding diversification. The green and social bonds are aligned with the bank's sustainability strategy, with our goal to contribute to nation building and to the UN SDGs and ESG principles in the conduct of our business. In terms of regulatory compliance, it has positioned us to be prepared to address the provisions and requirements of BSP Circular 1085 on sustainable funding framework. In our Sustainable Development Finance Program, we go by the mantra of turning our clients' business green to gold, referring to the financial advantages that green projects have. This still very much holds true today, even more true given the economic impact of the COVID pandemic. With the sustainability journey that BPI has taken so far, from our start with the sustainable energy finance and in financial inclusion, which has led to the issuance of green and social bonds, and the steps we're about to take this year and in the years to come as a bank, we have also actualized this mantra. Our issuance of green and social bonds is a part of a toolkit of sustainable finance and ESG principles-based initiatives to strategically incorporate sustainability into our business because of its financial materiality, both in terms of risks and opportunities. With the trends driving the global and local economy, it's all the more important that companies cannot be left behind on this path to sustainability. Thank you so much for your time, and that ends my presentation.
Thank you very much, Ms. Chinky Lukban. May I call on now Mr. Karthik Iyer from ACGF. Go ahead, Karthik.
Thank you, Mike. Could I get the slide shared? Thank you. Yeah. Good afternoon, everybody. It's a pleasure to be part of this panel, but also to listen to some of the previous speakers. It's very heartening and fulfilling in terms of how far we've come in the region. For my slides, I'll try and keep it short because we can leave some time for Q&A, I think, where you can jump in, because it's a fair bit that's been happening in the last year. So ACGF stands for the ASEAN Catalytic Green Finance Facility. The key here is the catalytic nature of it, and the idea is to provide a facility to help issuers and project owners. And it's a pleasure to say that this used to be called How Do We Mobilize Green Finance? And we now just moved, as you can see from the title of the slide, to Accelerating, which says a lot about how far we've come. And that's thanks to some of the issuers who've spoken on this panel today. So it's great to hear that. Next slide, please. So the idea here is that the facility will bring in some initial funding or TA support, and then see how we can crowd in other capital as well. Because the one thing which has been very clear, especially after COVID, is that not everything can rely on government funding. So how do we actually blend together different types of funding? So that's a key part of what we're doing. And as many of you know, it falls under the ASEAN Infrastructure Fund, which is country owned by the countries of the region. So ACGF fits under that, and that's our mission. Next slide. So I'll just dwell on the points on the left. There's a big focus now on green recovery, which probably doesn't come as a surprise to many of you. The main pillars that we're looking at is technical assistance for structuring green financing models, bonds being one of them, and the topic for today. De-risking that via the green window, the green facility, in terms of credit enhancements and providing de-risking mechanisms. Knowledge and capacity building, like we're doing now, but also at an individual issuer level, which we've been doing, which I'll share some flavor on. But the focus definitely is on green recovery, and you'll see that some of the case studies I'm going to present to you was front and center in that area. Last point on this slide, just in interest of time, is the power of partnership. So obviously we're working with a lot of partners in different countries to bring that blending in, and there's been a lot of pledges and actual partnership funding coming from many of them to support the region. You'll probably read more about that in the document which I've sent a link on, the ADB recovery, green recovery paper. So I'll leave that for now so that you can read that in your own time. Next slide, please. So the key part here, while we'll be talking about bonds, that the ACGF has an investment criteria, because obviously when you're lending or providing technical assistance, and in some cases, a wider ADB outside of ACGF, it's a privilege to say that both AP Energy and AC Energy have been partners in terms of how ADBs provide credit enhancement, as well as actual participation in the issuance. But from a project point of view, the key thing here is that how do we make sure it's actually green? So ACGF has its own green framework and criteria, and some of that actually helps us in many ways to bring in the bottom up and top down. So we look at the project level, but also the bonds which are then going into the use of proceeds where these projects come in. So sort of a unique combination of things I've had the pleasure of looking at from both sides in making sure that all that comes together from a framework as well as project selection point of view. Next slide. Next slide, please. Thank you. So the next 2 or 3 slides is where I'll focus bulk of the time, because we can talk about the actual technical assistance with the issuers. Sorry, if you just go back 1 slide, I think it might quickly flick to the next one. So I'll just give you the broad landscape of what we're doing. We're doing a lot of stuff. We have been doing a lot of stuff in Thailand. It's an ongoing program. I think we alluded to in earlier presentations of how it goes beyond a transaction to a program of work, because that's what the investors are looking for. So the Thai sovereign bond itself, which I'll come to in a second, the National Housing Authority, which has some read across from what we heard from CHAGAMAS earlier in terms of housing. We've been doing some work with the Bank of Agriculture and Agriculture Cooperatives and the Government Savings Bank across teams. We've done some work with Cambodia on the solar park from a TA support point of view. And more recently, literally the day before yesterday, GCF has just allocated 300 million to ACGF in developing a green recovery concept fund across the region. And that's going to include a lot of green bond support. So there's a lot of funding coming through, as I mentioned, from our partnerships and co-funders. I'm also working with a team on Indonesia state-owned enterprise, which is on the utilities side, to look at how they're transitioning from fossil fuel to a more greener pathway. And of course, Indonesia SDG 1, where we are providing discussions on TA support and how we can create a green finance facility. So the top part is that we are a facility, but then how do we drill down into individual issuers or countries and help them? And over time, the idea across these areas of engagement is to go deeper rather than broader as well, to look at SOEs and subnationals. So at some point, hopefully even cities and municipalities can join the force, deepening the market and making it more liquid. So that's the broad area. What I'll do is now get into the spotlight areas and share some war stories and experience from Thailand. And if there's time, we can cover others, but I'll focus on that. So on to the next slide, please. So it's interesting how some of the other speakers have mentioned, and that's a common theme here, where there's a big link on SDGs. So the green has become part of a wider universe, incorporating social things like gender. With the Thailand sovereign, which has been a unique kind of issuance, and that got a lot of attention, was because it was a combination of green and COVID relief. It happened in September of 2020, so it was bang in the middle of the lockdown, and we're still in the throes of finding a vaccine. So they took the step of looking at how they could apportion the bond use proceeds to, 1, making them green, and 2 is providing some support for the sectors affected by unemployment and the cash flow crisis. So the first issuance was a 30 billion baht bond, which is oversubscribed, and they came in as a 2-tranche approach to say, okay, there's a 10 billion going towards the MRT line, which is the electric transport, and then the others going towards actual cash disbursements for people stressed by the economic impact of COVID. So it's quite unique. It got a lot of attention, as I mentioned. What was interesting was also to understand the use of proceeds and how that pans out. Obviously, in the case of electric transport, it's fairly easy, but COVID was fairly new at that stage, right? So in terms of that being an actual use of proceeds, and then how that's going to be measured involved a lot of discussion. So we spent some time reviewing the framework with them. We looked at how that's enunciated and elaborated. how we could link it to the narrative of what Thailand was already doing. So for example, in Thailand's case, there was the sufficiency economy philosophy of Thai government, which has been there for a couple of decades, the National Development Plan, and so on and so forth. So we actually linked that, and then obviously linked the SDGs of how that can come through in the narrative for the bond. So when the investor actually sees that, they can see there's a long-term plan. And one of the key messages in both these Thai examples was that how do we take it from a pure transaction level to a journey level, that, okay, this is a journey of a bond program, and that the investor should be primed to say that, look, this is just step one in an ongoing program. So as you'll see from the use of proceed categories in the slide, there's a fair bit of coverage there. So this is not a specific project or existing asset. There's a very aspirational program of looking at multiple areas. So while it started with MRT and COVID, it's looking at healthcare, it's looking at education, agriculture, green buildings, land usage. And just to share with you that we're still ongoing, spending time with the Thai government and their finance ministry of how all these can be elaborated, both from a bond issuance point of view, but also from a project selection point of view. And I think my co-speakers mentioned that the project selection and making sure you have enough assets to actually match the aspiration of your bond size is a very big piece of the puzzle. And that's something we are heavily involved in across the piece. Right? So even with the other ones in Indonesia, where we're looking at energy assets, and that's very crucial that if you're really aspirational, yes, you've got renewable, how are you actually demonstrating you're moving away from coal? And what are the kind of things that come under that? There's anything from battery storage to actually looking at the expenditure and PPAs. So we're going through a gamut of underlying use of proceeds to understand and help them build their bond book. The second example, quickly I'll jump to, is the NHA, the National Housing Authority. So they started with a social bond quickly on the back of the PDMO and the finance ministry in Thailand at a sovereign level. And this is something, I think, part of the journey example where Thailand's looking at all of the SOEs, and there's a push and encouragement to say that, look, everybody should be looking at this and entering this market to deepen the local market, but also send a very strong signal to the international market. So we had essentially affordable housing, but I think one of the most interesting parts of developing their framework and the narrative and then the bond sort of governance was how we can match it to beyond just saying, okay, this is just affordable housing, it's social. But the overarching message that came out from that document and the marketing was the core areas was, yes, housing, but then the commitments towards inequality of income, commitment was climate, because eventually these are going to be energy efficient buildings over time, and that is very clear in that document. So even if it goes as a social bond, they're laying the roadblock, the steps of the building blocks to say that this is going much broader than that. So you'll see in some of the tables which we helped craft with them. And again, I'll point out other dimensions which we had really good, interesting conversations with them. So the idea is that it's affordable housing, but it's built in a way that there's a whole community feel to it. So that there's a community management cell in these areas, that they're bringing people from congested areas into these bit more living well kind of community well-being kind of structures, and how women can play a good role in that decision-making process of the community management. So we had to go through the SDGs and look at, okay, under SDG 8 or 9, what exactly are we looking at in terms of the impact and benefits for women? Similarly, what are we looking at in terms of community management or inequalities of income? So for example, the way the NHA was supporting these affordable housing was to have people under a certain threshold, so the target population had to be defined, but also slightly some people on the middle to high income threshold in the same complex. But however, what they would do was that the revenue coming from the high income and middle income was used to subsidize the low income. So it had a whole lot of dimension of how you could create equality as well. So there's a very interesting exercise, and we spent a lot of time comparing it with global best practices. So for example, Housing New Zealand was one of the examples I had used, and we sat and compared how they'd done that. Or Danone as a food company in terms of social, because they had elements of gender and other parts, to see how other companies had done it. So we had a very good workshop and looking at how we could look at that, so that when you do these things, the one thing to remember, I think all of you said this, that it's not just creating the framework, a document at the start, it has to link in how you can demonstrate in your impact reporting and allocation reporting downstream to say that that's how it was achieved. So that's the whole ex and ante reporting part of it. So there was a fair bit of pre-thinking to make sure that downstream things could be achieved. So those were two broad examples. I'm conscious of time. we need to make sure that we have time for others and also the Q&A. So hopefully you can ask me more questions there. So the next slide, very briefly, I've just summarized the type of TA activities where we helped. So right from the start, so it's the discovery phase, where it's even just understanding, okay, why are we doing this bond? What do we want to achieve in this? So that kind of discussion at a senior level we had, and then moved on to the actual framework, which we talked about. We also did a lot of knowledge sharing sessions. So I explained the Housing New Zealand. We brought in guest speakers and experts from other parts of the world to say, look, what exactly have you done? And also the external review providers to say, even before they were engaged to review and provide an SPO, to come in and say, look, what are you looking at to do here? And what have I've, as a reviewer, actually signed off in other examples. So we brought in sort of a knowledge sharing, no commitment basis to get an open conversation done. And then obviously I've touched on the framework itself, designing the framework, which we talked about earlier. The project selection and governance part was quite big. Both of these in this case with the sovereign backing and NHA sovereign guaranteed as well. So obviously they followed all the best practices, the gold standard, having a sustainable finance committee, which had all the key departments of the government in the sovereign case. We helped that, and also the project selection, which is actually ongoing. So we're already looking at the next step of the bond, the future bond program, and how we can look at a bit more trickier sectors, right? So what is this under the social? What are the subcategories of people? What target population? How do we benefit them, and how does that come under social criteria? A lot of coordination with external reviewers and certifiers as well, in terms of how that comes together, in terms of understanding the assets and making sure that even before you get there, that you're within the threshold and you're actually looking at that. And some of these actually involve working with consultants who are doing field visits, so right? So actually going to the housing community or going to look at the actual project and assets, especially in the Indonesia case, which I'm spending a lot of time. So to give you the level of engagement, so I'm actually on WhatsApp groups with the project selection people, where they can ping questions and we can come back with answers. So that's the level of detail we're going into, to make sure that they get it right, and also it's right, more importantly, from a perception of investors. We also supported on some communication and marketing in terms of what kind of slide pack are you developing, what are the key messages. Obviously, we do that in tandem with their lead managers as well as their communications team. We've done videos with them. We've invited them to panels where we've co-participated or put them in touch with other big conferences where they get an audience with international investors. And in many of these cases, since it was in September, we are in the part now where we're actually reviewing their interim report to provide them some inputs, as well as getting the external assurance provider to sign it off for them. So we've reached that space from what I explained in the previous slide in actual hitting the ground running. The last part is obviously in many of these cases, we're looking at, not these particular ones, sovereigns, but the sub-sovereigns are the ones we're looking at also what de-risking and credit enhancements we can give. So obviously there's the bond part, as we explained earlier. We also have the other pillars that we're supporting them with. And the essential part here is how do you embed this into your wider sustainable finance agenda? So as I mentioned right up front, think beyond the transaction and think what as a country or a region you're doing, because that's going to bring in more co-funders as well as more investors interested in the story of where your issuance and your overall country is going. So next slide, please. So sorry, I'm conscious I'm rushing. One of the key things is many of these conversations involve theme of the bond, because the market is rapidly growing into what used to be the plain vanilla, at this stage I'm calling it plain vanilla green bonds, to social, to sustainability bonds, to sustainability linked bonds, where they're linking it to the coupons and how you achieve KPIs. And then more recently, at least from an ICMA point of view, the guidance note came out and some white papers from the Climate Bonds Initiative on transition bonds, which is becoming more and more prominent, as well as more and more topical in terms of debate. So that's some of the areas, because the key reason for that as well is to bring in more sectors into the mix, right? So we are in this race at the beginning of this decade, 2030, and then also the 2050, as many of you have read in the news with people declaring the net zero transition pathways and aspirations. It's become very important that more sectors and more industries come into the mix. Next quick slide so that I can finish off with that. This is just a snapshot, and it sort of alludes to what I just said here. So on the left side, you can see the sectors. What we need is that, the usual suspects, solar, wind, all that is fine, but how can we bring other sectors which are actually adding to the emissions pathway and try to get them on a transition pathway to green. And that's where we are at now. And that's the kind of questions we're getting. And that's where we would like to encourage as well to people to say, look, hang on, if you want to deepen and broaden your green story and sustainable story as countries or issuers, let's start thinking about that. Let's broaden that. It will also bring more people to the market, deepen the market, because these are the kind of things we need and investors are asking for. And similarly, in terms of the type of issuers, yes, obviously the sovereigns, sub-sovereigns play a big role in sending the right message to the market that look, this is what this country is doing, but getting more of the non-financial corporates and corporates to add to the mix is what's needed. And as you can see, that's what the investors are asking for. So that's just an emerging trend kind of idea for you when you're considering what I should be looking at and also what type of assets will hit the sweet spot. I think the next slide is the last slide, and I'll stop there. Again, reiterating the support that we're giving, which is end-to-end support. So yes, those issuances and looking at bonds. How can you then look at the broader sustainable agenda in terms of policies and definitions, linkages with international alliances, because we're working with multiple countries, and then de-risking facilities and leveraging funding models. So there's co-financing opportunities. The GCF, which just happened this week, is a classic example where you're bringing all that to play into the region, and we'd love to support you. So do reach out across all these end-to-end pieces, and we'd be happy to do that. Thank you very much. So high speed there, I think, but I've been told conscious of time, but hopefully you can ask me some questions at the end of the session.
Okay. Thank you, Karthik. Thank you for the consideration and also for the excellent discussion. So for the first round of our Q&As, I would like to introduce our moderator. He is Bernard G. Chai, Chief Operating Officer of BDO Securities Corporation. As the COO, he oversees both marketing and operational strategies of the securities brokerage businesses of the entire BDO group. He has 20 years of experience trading in stock, FX, and bond markets on a personal capacity. And prior to being the COO, Bernhard set up and was head of the syndicate and distribution unit of BDO Capital, as you know, the investment banking arm of BDO. And lastly, he was previously the director and head of institutional sales of reputable foreign institutions, such as ANZ Banking Group and Standard Chartered. Table is yours, Bernhard. Go ahead, please.
Thank you very much, Mike. First of all, thank you very much for the invitation. It's an honor to be in the midst of experts, and of course, a lot of the earlier movers and shakers as far as the sustainability of our planet, I guess, is concerned. So I want to cut through the chase. My first question I'd like to address to Dato' Chong Chiliong of CHAGAMAS. Sir, you've indicated earlier on that there are scarcity as far as assets that will qualify for such social bonds. So I just wanted to know, what has the institution been doing, like CHAGAMAS, in order to make sure that there is an ample supply of these type of assets? What have you done internally to encourage this? And what have you done to educate the market to encourage so that there will be more of these issuances and more concern of not only the environment but also our social welfare?
Thank you for the question. Now, in terms of the assets, as for our case, basically CHAGAMAS currently buys housing loans. So basically, in terms of how we work with banks now, is to encourage them to really tag their assets so that it's readily available to be sold to CHAGAMAS, and we can refinance those loans or financing. So as far as the banks is concerned, they ask in terms of the building block, it's really to go through them now and look at the assets and working with them to identify assets available that can be sold to us. Now, on the other asset class, I believe, as far as solar panels are concerned, I think there have been a number of issuances in Malaysia for funding of solar panels by various other issuers. And also in terms of a green building that is under construction, a huge building that's been being constructed by the Sovereign Wealth Fund, basically has been financed using green bonds or green sukuk, sorry. So basically, in terms of the regulators, I think they are looking at how they can encourage more and more of this by giving incentive, as I mentioned earlier. So there could be exemption in terms of certain expenses can be claimed from a grant that's been established by the Securities Commission of Malaysia. Also, there's some tax incentive given in terms of that. So there's no, actually from our perspective, is more on the housing and all that. But for the others, it's really also looking at this incentive. That's why they will spur basically the development of the issuances of green bond or sustainable bonds or social bonds in the future. I think we have also social bond issued by a sovereign wealth fund, which is tied to the KPI or the performance of the students that are actually funded by under that scheme or by the proceeds of the scheme. So it is really something that is still in the developmental stage, but we believe more and more parties and corporates are aware of this, and I think they will be more and more as they will qualify in the future. Thank you.
Thank you very much, Datuk. My next question I'd like to address to my colleague in the industry, Chinky from BPI. In a way, I envy the fact that the BPI started all these green initiative way back 2008. So until now, I think you continue to sustain such efforts, which is pretty admirable personally, I think. So my question to you is, as one of those who pioneered and continue to have three of the very visible issuances recently of these sustainable bonds, right? I just wanted to know, does this really, at least from a Philippine context and from Philippine market standpoint, does this really translate to any savings for the institution such as yourself who issued? Let me just qualify that. In terms of savings, number one is in terms of maybe potentially, does it translate to lower coupon rates? Okay, as compared to when you would issue this using the normal bond route. Okay, so we're comparing two structures. One is if it's through the green or sustainability bond, as compared to maybe when you do an ordinary bank bond or even a dollar bond issuances. I just want to know if there's such savings for those who are wondering. Second question or follow-up question to that, if there is, then does this really get to pass on to the clients who have the same I guess vision as you that would borrow through this particular initiative of yours?
Yeah, Bernhard, thank you for the question. At the time of the issuance of the bond, on those three occasions, because of the oversubscription, then I think there is a few basis points advantage at the time of the issuance. Does it translate to the borrower? Not necessarily, because when we price our loans, it's really based on the credit risk. So today there is still very little difference as opposed to a regular bond issuance. But hopefully in the future, when there is greater demand in terms of loans that we can finance under this class, then there could be a difference potentially later on. But as of today, there are fewer projects in the renewable energy space. There are very few large projects at the moment. In fact, what we have funded of late are really more green building projects, because we are educating our medium-sized clients that there is such a thing as a green building code that requires green building projects to be financed. So if you're putting up a building or a low-rise condo, there is such a thing as a green building code, although it's not consistently enforced, if you will, by the local governments.
Thank you very much, Shinky. And of course, we look forward to more of these green initiatives and sustainability initiatives in the Philippines. So I guess my next question is addressed to Karthik. Um, I guess you've been here in the Philippines or have had Philippine experiences already and also in Asia. My question to you is this. Basically, GF has been very active as far as maybe Thailand. You mentioned Thailand as your number one, I guess, in a way, who was able to benefit from this initiative of yours. And you also mentioned Indonesia. So I guess the question there is why not the Philippines? And how, in a way, how far behind is the Philippines in trying to realize that this is actually good for the country? And my last question would be, what are the opportunity areas do you see if we were to compare ourselves with Thailand and Indonesia at this point, as far as the prospects for ACGF technical assistance?
Great. Thank you for the question. Yeah, so I think it's just happenstance that those things came up in quick succession because of COVID, I think, in many ways. We are in dialogue with the Philippines, as with the other countries, Vietnam, Cambodia. I think there's nothing to stop us. I mean, the Philippines has done quite a bit in terms, if you look at the actual issuances of the country after Singapore, it's quite high up there. It's over 2 billion in green bond issuances to date. So the question is almost, how does Philippines now leapfrog to the next level? It's quite there as a leader. I think for your second question, some of the, if that's in terms of opportunities, I would say the sectors, especially things like, given the location of Philippines and the nature of big coastal part, two big ones, I would say, sustainable fisheries. I think that's going to be a very big thing to look at. And obviously, given what's happening in Asia, the plastic pollution and circular economy, closely linked to that is, waste management and anything water related. An extension of that is obviously, having seen with all the cyclones and all the natural disasters, is a completely separate theme on adaptation and resilience. So I would say that there are some newer angles that is both an opportunity and a need for Philippines in terms of the geographical nature, as well as the urgency of addressing certain risks, that it's well placed to say, look, let's focus on that, because it's probably very well aligned to its climate risk, as well as its aspirations of being seen as a green and sustainable country. And we open doors on that. I think this dialogues we're already having with the finance ministry and different parts of the stakeholder group. So I'm sure it's just a matter of time.
Thank you, Karthik. Thanks for that information. So for the deal managers in this call, you know who to target now for your sustainable bond target market. I guess that's it for me, Mike, for now. I'm passing it back to you for our next speakers. Thank you.
Thank you, Bernard. So moving on to the next portion of our program, may I call on Ms. Shan? Go ahead, please.
Hi, good afternoon, everyone. Thanks, Mike. I will keep this presentation very brief for the sake of time. This report is this presentation is based on a report that ADB published last month on recent development of social bond in Asia. Next slide, please. Social bond is actually fixed income whose proceeds is used to finance social benefits. Next slide, please. ICMA actually already updated the social bond principle to reflect recent emerged social areas that can be financed to support the pandemic. For example, like employment generation, food security, sanitation, health, those kind of social areas. And then the targeted populations remains the vulnerable groups that need the particular support. Next slide, please. From this slide on, I will briefly picture the recent development in the social bond market globally and in Asia. In terms of global ESG bond issuance, you may see on the left-hand side chart, the global ESG bond market is still dominated by green bonds. However, last year, because of this COVID, investors and issuers globally has shifted their focus to social bond market and then also sustainability bond market. Basically, if you can see on the left-hand side chart, the last group of bars is the social bonds. Global social bond issuance reached a size of nearly 150 billion last year, posting more than 7 times growth compared to previous year. So it's a very fast expansion. And then the right-hand side chart actually pictures the structure of the global ESG bond market. So around more than half of the global ESG bond market is still the green bonds, and then followed by social bonds 1/3, and then sustainability bond 15%. Next slide, please. Global social bond market is still dominated by government agencies. And then on the left-hand side, we can see actually government agency, these several categories in the lower part of the pie is the government-related agencies accounting for more than half of the global issuance, and then followed by supranational, the blue part. And then on the right-hand side, actually, we shows the global social bond market is still dominated by Europe, followed by supranationals, and then Asia. Asia is now the global second largest regional social bond market. This structure is similar for green bond market in the very early stage, but gradually when the market is more developed, we will see more private sector issuers coming to the market. Next slide, please. Asia has see a very fast growth social bond market. On the left-hand side chart, we can see actually Asia is second to Europe as a regional social bond market. On the right-hand side, we can see that Asia posted the fastest growth in terms of the social bond issuance during the period of 2017 to 2020, posting more than 20 times growth compared to Europe and then other regions globally. Next slide, please. How about Asia? Asia's social bond market is largely driven by advanced economies like Japan and Korea. Both putting together, Japan and Korea contributed to around 90% of the regional total issuance on the right-hand side chart, as you can see. And then on the left-hand side chart, actually pictures the structure of countries in the Asian social bond market. We noticed that the PRC's social bond issuance is quite small. This is because in this data statistics, we focus on the social bond that is compliant with ICMA standard. Well, China is using their own domestic standard. Next slide, please. Having said that, Asia's ESG bond market, we can see quite different structures. On the left-hand side chart, the 3 bars pictures a green bond, sustainability bond, and social bonds with the market structures. We can see PRC is dominating in the green bond market. Well, Japan and Korea are leading the social and sustainability bond. And then on the right-hand side pie chart, we can see Asia, we see overwhelmingly issuance by government agencies is actually higher than the global share. So Asia's social bond market is particularly heavily weighted towards by government agencies. So more than nearly 75% of the Asian social bonds are issued by government agencies, followed by private financial sectors around 10%. That is the current market structure. Next slide, please. How about the social impact areas that has been covered? From this slide on, I will spend 4 slides talking about the social areas that the social bond market has been addressing. One key issues in the social bond market is the very diverse impact reporting and impact metrics in the market. Although there are some works has been done towards harmonizing, but we can see in real life, actually the reporting metrics can be quite different. This table shows actually 3 issuers, 3 Asian social bond issuers. They are all in the SME finance, but their reporting metrics can vary quite significantly. Next slide, please. Globally, on the right-hand side chart, we can see the key social areas that has been covered. Crisis unemployment alleviation, 1/4, affordable housing, 1/5, education training, 1/5. And then also health is also an important category because of this COVID. And then also SME financing. On the left-hand side chart, bar chart actually shows the social areas changes dynamically. So what we can see is 2020 actually posted above average growth in education and training, health, crisis unemployment alleviation, driven by the COVID, the need to address COVID challenges. Next slide, please. In terms of SDGs, on the right-hand side pie chart, we see that the global social bond market is more linked to SDG number 8, decent job, sustainable cities, SDG 11, no poverty, SDG 1, and then also health, SDG 3. On the left-hand side chart, bar chart, we see that 2020, we see a huge increase in SDG areas, decent job, number 8, health, number 3, no poverty, number 1, and also SME finance and education and training. So all COVID driven. So what we can tell is COVID actually driven a lot of interest in social bond issuance, and then the areas covered are largely COVID related. Next slide, please. How about Asia? This right-hand side chart actually pictures the Asia's allocation compared to social bond framework. The horizontal axis is social bond framework reference, and then the vertical axis is the actual allocation in Asia social bonds. So basically, if we see a dot below the line in the red areas, that indicates there is an under allocation in these social areas. What we can tell, Asia can still further issue more in terms of the areas like health, food security, water and sanitation. These are all relatively under-allocated areas that Asia can further build on its experience to expand these social bond markets. Next slide, please. This is the last slide. It is about way forward, how Asian economies can further develop their social bond markets. Asian social bond market is led by Japan and Korea, and repeatedly see issuers from the agencies that with a social mandate, like housing, SME financing, education. Actually, the Korean case shows a more replicable model for other Asian markets to follow suit in terms of a similar project allocation, but in Korea, the size is larger. And then also Korea's issuance is also largely driven by government agencies, which might be more suitable for other regional bond markets to follow case. The last slide, please. I would like to introduce that Asian Bonds Online now has ESG bond data for the ASEAN Plus 3 bond market. So if you need data, you can go to the Asian Bonds Online, and then you can also contact us if you have special data needs. Thank you for listening.
Thank you, Dr. Shan, and thank you for pointing us towards the Asian Bonds Online link. Now for our last speaker this afternoon, may I call on the Financial Sector Specialist of the ADB, Pok Pong-Sopol. Go ahead, Pok.
Yes, thank you very much, Mike, and good afternoon, everyone. So given the interest of time, I'll be very quick as well, so that we have enough time for another Q&A session. So next slide, please. At ADB, we have a regional technical assistance program to support the thematic bond issuers in the Philippines to issue this kind of bonds. I mean, from today's discussion, you might know already, Rob explained about the thematic bond issuance process, and also we heard from our, bond issuers about their experience in issuing thematic bonds. I think there's a common theme that we all, understand. One is that, issuing the first one is often the most difficult one. It's often the most time-consuming and resource-intensive, and there are lots of internal preparation, the thematic bond framework, the internal systems, allocation, and impact reporting. These are something that the issuers need to have ready before issuing the thematic bonds or green bonds. And the second key message that we got was that we can prepare the green bond framework or thematic bond framework that is most flexible, right? Or we can do it step by step. As Ms. Shinki mentioned, in the case of BPI, they started with the green bond. We took about 3 or 4 months to finalize the framework. But once you expand to cover social and sustainability bonds, it's much more simpler, right? And also we have seen most of all the issuers in this workshop has experienced a well oversubscription of their bonds. And also attracted new investors into the bond. And I think all of them have already, have the follow-up issuances. So issuing the first bond is often the most difficult one. But once you issue the first one, issuing the second one or the third one will be much simpler. And that's why we are here today to explain our support to the issuers as well as to the underwriters on how to help issuers issue the first one, right? So under ADB Technical Assistance Program, we work under the guidance of the ASEAN Plus 3 finance ministers and central bank governors. We report our activities to the governors and the ministers, on an annual basis. So in the case of the Philippines, we work very closely with the Department of Finance, the Finance Secretary, the BSP, as well as the SEC. And the work on green bonds is actually under the task force 1 on the bottom left-hand side, which is to help our member countries develop their local currency bond market, which is to increase the supply of local currency bonds. Next slide, please. So this is the scope of our TA support, and we will be happy to circulate this PowerPoint to all of you after the workshop. So we are hoping to work very closely with the issuers as well as the underwriters or advisors throughout the issuance process. Of course, we will provide hand-holding support to the issuers and other stakeholders so that the bonds can be issued successfully. And also we can work very closely with everyone to develop the sustainable bond framework or sustainable finance framework based on the international and regional standards and taxonomies, including the ASEAN Green, Social, and Sustainability Bond Standards, the Climate Bond Standards, and the ICMA, Green, Social Bond Principles, and Sustainability Bond Guidelines. And also in terms of the demand side, as Grace mentioned, we have been working very closely with the Asian Bonds Online to create a regional, green bond information section on the ABO, and it's already live. So, please feel free to visit the Asian Bonds Online for more information. And also, we are hoping to publish the case studies of the issuers that we support, and all these case studies will be made available to the public, as well as in our submission to the ASEAN Plus 3 government. But of course, these case studies will only focus on the issuer's experience in issuing the bond. We will not, collect any confidential information. So if you are interested, next slide, please, is the preconditions. As you may know, the Asian Bond Markets Initiative was set up by the ASEAN Plus 3 government to develop the local currency bond markets in our region. It was set up in response to the 1997 Asian financial crisis. So the issuers who would qualify for our support will need to issue any kind of thematic bonds in local currency. So in the case of the Philippines, the bond needs to be issued in the Philippine pesos, or if there's any large conglomerates or any entities that would like to expand their business into another ASEAN Plus 3 countries and would like to raise funds in that local currency, so as to avoid any financial foreign exchange risk. We are also happy to support as well. For example, if a Philippine company would like to expand to Vietnam, Thailand, and would like to issue the bond in Vietnamese dong or Thai baht, we are happy to support that kind of transactions. And of course, the bond needs to be at least aligned with the ASEAN standards developed by the ASEAN Capital Markets Forum, which we are very grateful to have the Philippine SEC as a co-chair of the working group that developed that standard. Plus together with other international standards such as the climate bond standards and all the ICMA sustainable bond principles. And also the issuers should demonstrate the willingness to issue sustainable bonds on a regular basis. If you recall from Rob's presentation on the last slide, issuers can issue different tranches of bonds to finance their projects. There's no need to issue only one bond and then have a negative carry and also for the money to be disbursed. So we would like the issuers to issue the bonds on a regular basis, as we would like to develop the market in the Philippines. We often say that issuing the bond only once is not worth it, compared to the effort that you need to put into in order to issue the first one. And also issuing the bond only once doesn't create the market. Right, so we would like issuers to issue this kind of bonds on a regular basis, and issuing the second one or the third one is much easier than the first one. And also, we would encourage issuers to share with us their experience. If it's not an intensive activity, we will come up with a template, and perhaps we can set up like an 1-hour interview with the issuer so that we can prepare the report. And when it comes to the scope of our support, as I mentioned, we would work very closely with the issuers from the very, very beginning to identify the eligible project or assets that are aligned with the standards, help you confirm internal process and control, and also, prepare the sustainable bond framework to help the issuers create a good storyline for the issuance and to attract investors into the bond. And also we can engage, facilitate, and seek your discussion with the external reviewers or external verifiers. And in some cases, we can subsidize the external review fees. And that's something that we are happy to discuss with the underwriters and the potential issuers. And also, similar to what Karthik mentioned, we are happy to help educate the investors. We had a case study in Thailand where the issuer was conducting a roadshow for 1 hour, and the issuer had to spend about half an hour just to educate the investors about the thematic bonds, about their bonds. So we are happy to undertake that role and happy to participate in that roadshow as well. So if you're interested, please feel free to get in touch with us. I have my email address there, and we will be sharing this slide after the workshop. And next slide, please. Perhaps I will skip this one, but what you can see from the Philippines, and this is what I think Francis mentioned in his opening remarks, that we have seen about 3 billion of thematic bond issuances in the Philippines, but this is still extremely small if we compare to the total size of the Philippine bond market. Next slide, please. So we have seen, on the left-hand side, this is we have seen significant growth in the size of local currency bond market in ASEAN, the blue line, and similarly, we also see the same, growth in the Philippines on the right-hand side in the blue line as well. And of course, we have also seen, significant growth in the thematic bond market in the Philippines, especially after the SEC issued a guidance encouraging issuers to issue social bonds to finance post-COVID recovery. So this slide shows that the local currency bond market is extremely important, and thematic bonds can certainly accelerate the local bond market development even further. Next slide, please. And this is just a trend that at the global level, major institutional investors are already looking for investment opportunities in companies that have good ESG practices. But this is from the UN, Principle for Responsible Investment. The fund managers who have signed up to these principles, as well as their AUM, has been increasing every year, right? So it is important for companies to, consider ESG or even, green bonds, social bonds, sustainability bonds issuance as part of their financing strategy in order to attract more and more investors. And next slide, please. This is the survey by the Climate Bonds Initiative, who have done the survey among the treasurer of the bond issuers. Almost, more than 90%, almost 100% of them say that issuing thematic bonds to allow them to expand investor base, increase the reputation or the visibility, and even help them improve their internal governance. And as well as there are also feedback about the additional cost to issuing thematic bonds. Of course, the issuer need to come up with the good internal control systems, have to pay for external review fees. This kind of cost can be seen as negligible by the existing green bond issuers, as compared to the benefits that they would get, from issuing thematic bonds. And next slide, please. This is a good experience of the issuers. We have heard, from Mishinki from the BPI, and also we another deal was in Thailand, the BTS group, that also achieved about almost 10 times over subscription of their local currency bond as well. Next slide, please. And this is the image of the Asian bonds online. As I said, we have introduced the green bond section on the right-hand side. You can go to the ABO website, or you can simply scan the QR code over there, and that will take you directly to that web page. And next slide, please. And what we have on that web page is the detailed guidance for issuing green bonds. And I have included a PDF link in this slide as well. It is the expanded version of Rob's presentation earlier. So there are much more details in there. So please feel free to go through this document. And if you have any questions, also please feel free to get in touch with us. Next slide, please. And this is my last slide to explain the comprehensive technical assistance support that ADB provides to the local stakeholders in the Philippines. At the top, we have the ASEAN Capital Markets Forum that support the policy discussion among the ASEAN regulators. And also on the bottom left-hand side, which is the TA that I am talking about, our focus is to support corporate issuers to issue thematic bonds, right? And what Karthik mentioned under the ACGF appears on the right-hand side, which focus on the sovereign and sub-sovereign thematic bond issuance process. So from ADB, we have a comprehensive TA program to support all kinds of issuers in the Philippines. And next slide, this is my last slide. So after the workshop, please feel free to get in touch with us so that we can explain further in more details. Thank you very much, Mike. Back to you.
All right. Thank you, Pak. And back over to you, Bernhard. Go ahead, please, for the second.
We'll try to make this short and sweet. For my first question is I'd like to address to Rob. You know that we are actually an audience of bankers because all these figures and numbers keeps coming out. So the question to Rob is, number one, how long does it normally take from initial contact with a potential issuer to the actual bond issue? Okay, a range is okay. And a follow-up question to that is that obviously, what is the minimum bond issue size in your personal experience that would make all this green structure worth the I guess the expense?
Thanks for the questions, Bernard. For the first question, we've seen it take probably minimum 3 months to go from the initial idea, create the framework, get the external review, and go to market. That's been quite quick, but it's possible, especially if the issuer has a sustainability story already and they have a good understanding of their own situation. It can take up to 12 months. Some of the governments who've issued sovereign green bonds have taken quite a long time to bring together the various ministries, have a formalized approach, bring the data together. So it can take quite a long time. But most of those governments are looking to issue again and again. So it's an ongoing program. Takes some time to set up, but worth it. In terms of size, it's pretty much the same as normal bond issuance. If you're going to go to market with a bond, it's got to be a certain size to justify the transaction. What we find is that if an issuer is flexible about the structure, then the investors can often drive the sort of size. And we've had examples of entities preparing for a bond issuance of 50 million US and finding they've got 3 big investors who want to take it all, and they just cut a private placement arrangement. So the labeling is not really, it's not really driven by the structure. So if you have a labeled loan or a labeled bond, then you can swap around and use different structures there. What we do want to see is green loans flowing up into the banks and then them issuing green bonds into the market. That's what the flow that we want to see. Investor money going down through the bond issued by the bank into the loans that they have, they're trying to get more of in the green space. Thanks.
Thanks, Rob. I guess the next question, we have still one time. Mike, do we still have time for one more question?
Around 2 more questions.
Oh, fine. 2 more questions. Okay, this one I'll prioritize the more interesting one. The question is to anybody who can answer. Okay, are there any Philippine-based firms right now that you can classify as second party or an accredited review or audit as far as green certification is concerned? Is there any local Philippine firm for this who can do this right now?
I would say not yet, but this is something that we can support. ADB, we supported TRIS rating from Thailand and also RAM sustainability from Malaysia. who were both accredited by the Climate Bonds Initiative as the local green bond verifiers. And we are hoping to find an entity or one or two entities from the Philippines who would want to offer the same service, to the local issuers, and especially this would allow the local issuers, especially the medium size or the smaller issuers, to come to the market. I think the best part of the ecosystem is that having someone on the ground who speak the same language as you, to understand the regulation, the market practice, to help develop this sustainable finance market in the Philippines. And this is part of our TA support. So if anyone have any interest entities, who would want to offer this kind of service, please reach out to us. Thank you.
Okay, thank you very much. Okay, for the last question, again, maybe I would prefer if maybe the BPI with local experience can answer, but nonetheless, it's open to all, especially for those who have issued, like CHAGAMAS. So the question is this: what sort of tenor and issue size can you expect from issuer in the Philippines to be able to raise funds? What sort of tenor and issue size is acceptable in the market?
Well, we've done our Swiss franc. I think was about 2 years or slightly less. So it can be as short as that. And our bond issue, the US dollar bond, if I'm not mistaken, let me check, was a few years, was longer than that. No? So it really depends on the pricing and the tenor that, a lot of them will accept longer tenors as well, 3 to 5 years. So it really depends also on the needs of the issuer.
Okay, thank you, Chinky. Datuk Chung, would you be able to add to that, or maybe from Malaysian context?
Maybe just to mention, I guess in terms of tenor, probably it should be 1 to 5 years. And in terms of asset size, possibly 100 million and above. But for US dollar, I think probably if you think for public issuance, have to be a minimum of 300 million benchmark size. Thank you.
Thank you, Datuk Chung. Sorry, one last follow-up question, which appeared. Obviously, somebody's interested here. They're looking at 15 years. So I guess I'd like to address this question to ACGF. Do you think that you guys will be able to provide technical assistance for an issuer who is willing to do 15 years? And of course, the next question there is, what sort of pricing can they expect?
So the example I use is obviously a sovereign example. The Thai bond was 15.34 years. So they achieved a 1.585 yield coupon rate, for example, in their market, obviously. I think the question is also what kind of assets and what your user proceeds are, and what's your long-term planning for the sovereign level. They have very macro level planning for 15 years. Whereas if you're a single sector and you have that you're looking at financing or refinancing, you're looking at a look back period and ahead period in terms of what you're planning to invest in or your capex plan. So that'll define the tenor of the bond, and then that will also define the pricing. Because you're holding the money for longer. But yeah, as an answer for specific example, coincidentally, so the Thai bond was 15 years, which covered a whole lot of sectors which I showed in my slides.
Thank you, Karthik. Unfortunately, we don't have more time anymore. More questions are coming in on pricing. So I'd suggest POC to please engage our audience, and of course, Karthik for those questions. For now, thank you very much, and I turn it back to Mike.
Thank you very much, Bernhard, and the rest of our speakers. And now to wrap up our webinar this afternoon, may I ask POC to take the floor, please. Thank you.
Yeah, thank you very much, Mike. And on behalf of all the organizers, I would like to thank the CMDC, the SEC, FinNex, the Banker Association of the Philippines, and the Investment House Association of the Philippines, and our organizers, the team behind the scenes of our speakers, and also all the participants. Thank you very much for joining us here today. And as we mentioned, if you have any upcoming issuances that would like the support from ADB, we are happy to support all of you. And please reach out to us, either myself, Karthik, Rob. Our emails are on the slides, and so that we can discuss with you in more detail. Thank you very much.
Thank you.
Thank you very much. Have a nice day, everyone.
You too. Thank you very much.
Thank you.
Thank you. Thank you.
Thank you.